This documentary details 10 years of systematic corruption and potential criminal behavior by Mayor Michael Bloomberg, who owns 88% of Bloomberg LP. For 30 years, his financial terminals have been the brains behind Wall Street and the banking system. The mayor secured billions of dollars in city and state tax breaks for banks, plus government kickbacks to his longtime customers, while 20% of the city's residents live below the poverty line. In 2003, the mayor pressured Governor Pataki to appoint Bloomberg's unqualified domestic partner, Diana Taylor, to be the New York State banking superintendent. Taylor was the most powerful New York State regulator that had oversight over AIG and the criminal division that was responsible for prosecuting the customers of Bloomberg LP. The mayor has redefined revolving door corrupt crony capitalism. Dozens of former Bloomberg LP employees have worked for the Bloomberg administration. In 2002, when he became mayor, he was worth $4.8 billion. Today, the mayor is worth $19.5 billion. The mayor personally made $4,027,000 every day during the past 10 years. He's the 12th richest person in the country and the wealthiest politician in the history of the United States.
I saw a thing today where, and it's probably embarrassing, you're like the 10th wealthiest person in the world or something?
That's not embarrassing.
Michael Bloomberg began his business career on Wall Street when he joined Salomon Brothers as a trader in 1966. In 1981, after 15 years at Salomon Brothers, he was fired and given a $10 million settlement. He used this money to start his own company, creating financial analysis terminals for banks and investment funds. In 1982, Merrill Lynch became the new company's first customer. Merrill installed 22 terminals and invested $30 million in the company. 300,000 Bloomberg terminals are used today by banks and investment funds. They pay a subscription fee of $20,000 a year, totaling $6 billion in sales and $1.5 billion in profit every year. Terminals are over 90% of Bloomberg LP sales. The mayor owns 88% of Bloomberg LP. According to Bloomberg LP's website, within 10 years of its founding, Bloomberg LP had made over 10,000 installations of the Bloomberg Professional Service, a groundbreaking data, analytics, and information delivery service. The next decade saw subscriptions skyrocket to 150,000, while Bloomberg.com and Bloomberg Tradebook launched, allowing traders to trade stocks directly through the Bloomberg Professional Service. Subscriptions doubled yet again to over 300,000. The terminals are used for markets such as fixed income, which includes mortgages and debt, equities, derivatives, commodities, foreign exchange, currencies, and combines portfolio and risk analytics tools. You can see the fair value and risk profile of transactions ranging from simple vanilla swaps and options to the most exotic structured notes, with transparent structuring and pricing tools fed by intraday input data and powered by cutting-edge models.
In response to the increasing sophistication of financial instruments and asset allocation strategies in an ever-changing regulatory landscape, we have expanded our end-of-day valuation service, BVAL, to include OTC derivatives and structured notes across all asset classes and levels of complexity.
If this sounds confusing, that's because it is. The Bloom Bubble terminals create a false sense of confidence for bankers and asset managers by giving them the illusion that they understand the complexities of their portfolios. The terminals fooled bankers into believing that they understood the value of the derivatives and mortgage securities that they were buying. This led to the collapse of the financial system.
People always call this a technology company, and I never thought that was really a good description. It was gathering information and categorizing the information and giving people software that they could turn that information into useful tools in their decision making. The more complex the world gets in the financial world, the better our business will be, because you really do need to have technology or have software to analyze what things you own and what the risks are.
The Bloom Bubble terminals gave bankers a false sense of confidence that their businesses would also be better as the financial world became more complex. From 2003 to 2007, banks had record profits. The financial collapse occurred because the Bloom Bubble software failed at analyzing
what things you own and what the risks are.
The mayor was CEO of Bloomberg LP for the first 20 years. He knows banks and investment funds are his customers. The mayor's economic development policy has provided the largest tax breaks and financial incentives to banks. New bank employees lead to more $20,000 terminal subscriptions. The mayor appointed 3 deputy mayors of economic development since 2002. All 3 have over 20 years' experience as executives at banks or investment funds. Robert Steele worked at Goldman Sachs for 28 years and retired as vice chairman. Mr. Lieber left Lehman Brothers after 23 years as a managing director in Lehman's real estate private equity fund and was the global head of real estate investment banking. Doctoroff worked at Lehman Brothers, then for investment fund Oak Hill Capital for 14 years. Doctoroff resigned as deputy mayor to be the president of Bloomberg LP. Doctoroff is now Bloomberg LP's president and CEO. 2 of the largest New York City economic development packages went to banks. Goldman Sachs received $1.65 billion. Bank of America received $625 million. Michael Bloomberg became mayor of the financial capital of the world to help determine bank employment quotas, which increases terminal subscribers. Goldman committed to have 9,000 people through 2028. These tax breaks could rise to as much as $150 million if Goldman adds 4,000 new employees by 2019. In a September 2005 article in New York Magazine, Chris Smith discusses his interview with Michael Bloomberg. Bloomberg describes how he lobbied Henry Paulson Jr., the Goldman Sachs CEO, to build the company's new headquarters across from Ground Zero. I told him, "We can help with minimizing taxes. We can help with minimizing your rent. But even Bloomberg can't spin the fact that Goldman got more than $1.65 billion in city and state help in the deal." So he digresses into a rumination about his generation of financial executives. "Hank is a business friend," Bloomberg says. "Most of the guys that run these big firms, they're my age. And because of my company, there's a credibility. They respect somebody who's not a politician. And I think it's fair to say they like the progress in the city."
What do you say to those people who are part of Occupy Wall Street?
I hear, well, everybody's got a different view of what they're protesting. I hear your complaints. Some of them are totally unfounded. It was not the banks that created the mortgage crisis. It was plain and simple Congress.
A 2010 Politico article details a bonus battle between Mayor Bloomberg and Senator Webb. New York City Mayor Michael Bloomberg is circulating a memo to members of the New York congressional delegation urging them to vote against Senator Jim Webb's amendment slapping an additional 45% tax on bonuses in excess of $400,000 on firms that dipped from the TARP well. Bloomberg LP customers like Goldman Sachs, Bear Stearns, AIG, Citigroup, Credit Suisse, Deutsche Bank, HSBC Bank, JP Morgan Chase, Lehman Brothers, Morgan Stanley, and Merrill Lynch have all hired lobbyists to lobby the Bloomberg administration, with several specifying the mayor's office. Of the 124 companies on one or both of the Bloomberg LP lists, 33 appear on the Campaign Finance Board's list of companies doing business with the city. In 2002, Mayor Bloomberg agreed to release a list of the top 100 customers of Bloomberg LP, but the list did not disclose revenue per customer or the top customers. A groundbreaking cover story investigation by Wayne Barrett of the Village Voice in September 2009 detailed the failed oversight by the committee that is the only watchdog chartered under the city with inspecting Mayor Bloomberg, the Conflict of Interest Board. Bloomberg appoints all 5 of its members. Wayne Barrett's article states, a customer would have to constitute 10% or more of Bloomberg LP's total sales to trigger any conflict concerns and force the mayor to seek further advice from the COIB. Since this requirement remains in place today when revenues exceed $6 billion, a customer could do more than $500 million worth of business with Bloomberg LP and still walk into the mayor's office to get a land use or contract approval without tripping an alarm. In 2002, Bloomberg told the COIB that the largest customer on the list accounted for less than 4% of total revenue, but no one knows how much that may have changed since then. When the board got a fresher list of the top 100, still unranked, in December 2007, it says it mistakenly forgot to post it.
Big cities have always been prone to homelessness, but what is going on in New York City right now is really beating all records. Last year, homelessness in New York has gone up by an entire 50%.
Mayor Bloomberg's policies have created enormous challenges for the average New Yorker. Rents and the cost of living have skyrocketed since 2002. Chris Smith of New York Magazine in October 2011 wrote, "New York has always been a city of extremes, but the percentage of households with annual incomes of $200,000 or higher has nearly doubled since 2000, while the percentage of renters paying more than 35% of their income towards housing has ballooned to 44%, and the share of New Yorkers living below the poverty line, about 20%, hasn't budged." Diane Taylor has been Michael Bloomberg's live-in domestic partner for over 10 years and is the First Lady of New York City. She attended the mayor's inaugurations with his children. In 2003, Governor Pataki nominated Taylor to be the New York State Superintendent of Banks and Chairwoman of the New York State Banking Board.
Thank you, Mr. Mayor. That was very nice.
Taylor had 600 employees that reported to her. Taylor details her bio on the website for her current job at Wolfenson & Company, which is led by James Wolfenson, the president of the World Bank from 1995 to 2005. From 2003 to 2007, Ms. Taylor was superintendent of banks for New York State. In this capacity, she was responsible for overseeing the regulation for over 3,500 financial institutions, with assets totaling over $1.5 trillion, including the New York State chartered banking institutions and over 80% of the foreign banks that do business in the United States. Taylor had no experience as a regulator and was not a successful banker. Taylor had oversight of the Criminal Investigations Bureau. The department's Criminal Investigations Bureau provides specialized investigatory capabilities with respect to allegations of criminal activity involving the financial industry and works cooperatively with law enforcement organizations at the local, state, and federal levels. Taylor regulated AIG because they have a New York State charter. Under Taylor's watch from 2003 to 2007, banks drastically increased the amount of speculative mortgages and credit default swaps that they created, sold, and traded. This increased the need for Bloomberg terminals. Taylor knew these speculative securities were the growth area for Bloomberg LP. In September 2006, at the height of the criminal behavior by Wall Street, Taylor testified before the United States Senate. Risk management has improved at our largest banks, and important data collection and modeling efforts have taken place. Supervisors in the industry now have an increased understanding of credit risk and operational risk, and data collection efforts of characteristics of operational risk events, classification of credit losses, and differentiation of losses during economic downturns have begun that will be extremely valuable in the years ahead. Supervisors have gained a greater understanding of bank portfolios. Taylor falsely repeated the marketing propaganda of the terminal's portfolio valuations, features, and algorithms to analyze mortgages and credit default swaps. Taylor lied by providing a false sense of financial safety, that financial modeling has improved risk management. In a recent article in the New York Observer, Taylor discusses her invitation to run for the United States Senate. "The Senate Republicans basically asked me to run, and I thought about it. Talked to a lot of people," she said. "But then, when I really thought about it, what attracted me to the idea was the race because I knew I could win that race." The reason Senate Republicans asked Taylor to run is because of her partnership with the mayor. The only chance of a victory for Taylor against Democratic Senator Gillibrand in a heavily Democratic state would be if the mayor spent over $100 million and hired Taylor's political opponents as he did with his elections. The mayor uses his foundation to buy support from local community organizations and nonprofits. Baruch College politics professor Doug Muzio notes that organizations throughout the city are very aware that they are in competition for the mayor's money. "It has silenced critics," he said. "You don't want to bite the hand that feeds you." According to rollcall.com, the combined net worth of every United States senator and House member is $2.04 billion. The mayor has $19.5 billion, plus $1.5 billion a year in new profits. Bloomberg LP is one of the largest financial service lobbyists. In the past 6 years, Bloomberg LP has spent $3,870,000 on lobbying the federal government, which includes $980,000 in 2010. A Bloomberg LP lobbying report from Q1 2010 discussed the specific lobbying issues: market data issues relating to customer and investor access to information, financial market structure, financial regulatory reform proposals, and pending derivatives legislation. Houses of Congress and federal agencies lobbied: United States House of Representatives, United States Senate, Commodity Futures Trading Commission, Securities and Exchange Commission. While Taylor was New York State Superintendent of Banks from 2003 to 2007, Bloomberg LP lobbied to weaken federal government bank regulations. In 2009, Taylor joined the board of directors of Citigroup. On October 19, 2011, the SEC issued a press release. Citigroup to pay $285 million to settle SEC charges for misleading investors about CDO tied to housing market. As the First Lady of New York City, Taylor should represent the best interests of the city residents. Many of these residents were defrauded by Citigroup. Was Taylor involved in this settlement as a board member of Citigroup? Is Taylor hiding crimes at Citigroup? Taylor enjoys the benefits of being First Lady while avoiding the responsibility of protecting New York citizens from being victimized by financial institutions. Matt Taibbi, the author and journalist for Rolling Stone magazine, wrote on his blog on October 25th, "We have a massive police force in America that outside of Lower Manhattan prosecutes crime and imprisons citizens with record-setting, factory-level efficiency, eclipsing the incarceration rates of most of history's more notorious police states in communist countries. But the bankers on Wall Street don't live in that heavily policed country. There are maybe 1,000 SEC agents policing that sector of the economy, plus a handful of FBI agents. There are nearly that many police officers stationed around the polite crowd at Zuccotti Park."
Let's see, just about now, Osama bin Laden is probably showing Kim Jong-il around hell. So now only tiny tyrant left is Mayor Bloomberg.